Good morning and welcome to the Leadership Insurance Podcast. Today's episode of the podcast is something a little bit different from our sort of usual weekly conversation. In this episode, we brought together some leading insurtech specialists to discuss the insurtech trends of 2022. It's kind of a half-year report is what we're looking for. So, last year was a record-breaking year for insurtech. Global VC investment in insurtech grew from 1.8 billion in 2016 all the way through to $10.5 billion in the first 3 quarters of 2021 alone. VCs funneled something like 2.7 billion euros into European insurtech startups in 2021, minting 6 unicorns, including Marshmallow and Tractable. And the insurance industry has responded well to the pandemic. It's currently at the cusp of significant growth. And there's so much in the way of transformation opportunities out there. Now we're 6 months into 2022. We wanted to look back at the trend predictions made at the start of the year, discuss their accuracy and what we've seen so far, as well as going into what's still to come or what's evolved out of this year alone. At the beginning, there was lots of speculation in what defined industry trends would be this year. We looked at various predictions laid out by leaders and picked some of the highlights, which we'll reflect on today. And just for our guests and people listening in, we took this from various sources. So there's not one source, but sort of in trends we looked at the rise of embedded insurance, climate change and sustainability to become key topics within insurance, drones and robotic insurance technology, increased adoption of health tech wearables, data first insurtech ecosystems, and then the growth of low code / no code insurance technology platforms. Now I'm conscious that all of those are in a podcast in themselves, but we're just going to get some thoughts, get some updates, see what we think has kind of really emerged as trends. Before I do that, let's get some genuine experts in to talk about that. It'd be great if you guys could introduce yourselves to those that might be at home, because we've got 4 kind people that have joined us. And we've already done this in rehearsal, so we're going to be seamless at this now. So Mark, would you please introduce yourself and the business you work for?
Yeah, many thanks, Alex. So hi, everyone. My name is Mark McDonald. I'm Head of InsurTech Strategy for Altus Consulting. So Altus Consulting, we're an independent specialist consultancy focused on strategic, operational and technology change in the insurance industry, working with clients across personal, commercial and specialty lines here in the UK. Brilliant,
thank you. Jantana, would be kind of you've been a guest on here before, so it'd be kind of you to reintroduce yourself to our audience, that'd be great.
Thank you. My name is Jantana, and I'm one of the co-founder at Tapley Insurance on Tap. We are one of the few first on-demand insurance provider for the gig economy, and we also provide technology solution for insurance industry.
Thank you. And just because of the way I'm orientated on my screen, David, if you'd be so kind as to reintroduce yourself to the audience as well.
Thanks, Alex. David Fontaine, co-founder and CEO of Foresight Commercial Insurance. We are an insurtech, workers' comp insurtech that focuses on core industries, construction, manufacturing, and agriculture across the United States.
Thank you. And Matt, I can't believe we've not had you on the podcast before, but we haven't. So Matt, if you'd be kind enough to introduce yourself as well.
Hello, Alex. Thanks for having me on. So Matt Connolly, founder and CEO of Sonar. We are a market scouting and open innovation platform. So we track millions of startups and scale-ups around the world, and we help our clients, who are all insurance companies, better understand market trends and who the companies are that are shaping those trends.
Wonderful. Well, thank you all. And yeah, Matt, I'll probably stay with you actually, mainly because I think about 2 hours before this, we started recording this podcast, it announced that you were going to be partnering with Lloyds Lab and helping them kind of scout some of their new people for the lab. So congratulations, that's quite an exciting partnership.
Thank you.
I wanted to start with you because Sonar is specifically built to look at innovation and incoming trends. So not wanting to put you on the spot in terms of kind of what's happening, but I wonder if you might make a sort of generalized comment on what's happening now as opposed to what was happening at the start of the year in terms of kind of trends, if there's any specific themes that, whether your subscribers or clients are kind of really kind of interested in now that they weren't interested in at the start of the year.
Yeah, I think so. And what I'm about to sort of enter into is probably, as you alluded to earlier, it's like probably a podcast in itself. But I think there's a couple of things. So the way that you previously dissected the trends coming into 2022 is very much kind of sort of broken them up by segment. But if I kind of take it up a layer, even, where we started the year to where we're at now is whilst kind of COVID for many is somewhat suppressed, and in the UK we're sort of blindly ignoring the fact that COVID is still around, and it's only just traveling. I'm currently in Singapore, where we're actually, it's mandatory to wear a mask here, there, and everywhere, and you realize it's still sort of very prevalent. But I think more than COVID is actually just the state of the economy. So I've just been in the States. In fact, Alex, we caught up there. But from when we met up, went down to Philadelphia and joined Guy Carpenter, who had a guest speaker who was talking about the state of the economy. And he was presenting facts, figures, and slideware, which really just screams kind of economic downturn, right? And we've been reading about it, we've been hearing about it. So actually, when we talk about the numbers invested into insurtech last year, the number of deals, the totals in terms of billions, whether European market or global market, I think actually the most overarching theme will be just how difficult will it be for insurtechs to raise capital like they did last year. Where that money will be coming from, and what they will need to be evidencing to be getting that capital. And I think that will change the market substantially. It'll change behaviors. There was someone up on stage. I was listening to a panel discussion where she was a lady leading a venture capital firm, and she was saying to her cohort, think of this as your last round. How are you going to turn a profitable business? And I thought that's fascinating, right? Because lots of these businesses have been sinking enormous amounts of capital in to their growth and building a strategy for that. So if that isn't available to them, then how will that change the industry? So I think less money out there. It will certainly, from a insurance company perspective, mean that there will be much more laser focus on who they are choosing to work with, a lot more concentrated effort on making sure they have either the right investment, acquisitions, partnerships, and then probably back to the acquisitions point. I think we're going to see a lot more M&A over the next 6 months as well, from incumbents as well as well-capitalized insurtechs buying other smaller insurtechs.
Yeah, no, that's fascinating, and that's definitely something that resonates with the conversations I've been having. We do a lot of work with venture capital markets and working with their portfolios, and certainly the sort of general theme appears to be, be leaner, make sure your runway lasts. If you have to cut, and sadly we've seen that. We've already seen people kind of not growing, and in fact getting rid of people at the moment. And there's an argument that it's a correction, and some of that should be seen as being good, I think. But then also I wonder about that economic environment dictates a different business strategy. Like if you're raising money in an environment where you can go from round to round to round, then that, it is okay to lean into that. But the difference is now, if you were presenting a deck now, you would have to have a different strategy. And I think we're already seeing more growth in kind of SaaS, really discrete solutions for carriers and things, or the industry. So yeah, definitely something that we've reflected on. David, I wonder if I might jump to you, because it kind of relates to the conversation we've just had. You raised a very significant round. I think it was $39 million. Was it the start of 2022? Or was it 21 into 22?
It was October 21.
Yeah, and going into 2022, I wondered, if you'd reflect on where you were talking to investors, what their interests were, what they were digging into at that time, and whether you think that would be a very different conversation now, and how you would approach that, because you're in quite a unique position in that you've got a sort of SaaS proposition part of the business, and you're a risk carrying MGA part of the business as well. I think you're in a sort of unique position to comment. Do you think it would be a very different conversation now?
Yeah, absolutely. I definitely echo a lot of that sentiment from what we're seeing in the market over here in the United States. A lot of VCs and venture capitalists are basically being a lot more cautious with their checkbooks, and we're not seeing the amount of deals that we saw at the end of last year. I think for insurtech is troublesome because any kind of regulated industry like banking or insurance, it's they generally go hand in hand with being capitally intensive, and so we're going to see a lot. I'd say with a lot of money, with a shortage of money being in the system, we're going to be seeing a lot less innovation and a lot more M&A. So I definitely would echo Matt's sentiment in what we're seeing in the market over here. We did raise a decent amount of money in October, and however, comparative to other insurtechs in our space, that we're certainly not one of the larger ones in the commercial insurance space. Our multiplier on our amount of written premium was relatively modest when you consider some other insurtechs that were getting 10x, 15x, 50x on amounts of written premium and really not paying attention to margins and loss ratios. So we like to think we've always taken the approach of being part of the second wave of insurtech, which is about sustainable growth. And I think that mission of sustainable growth through having profitable loss ratios, having positive margins, and working your way through to profitability, having a clear path through to profitability rather than growth at all costs. Let's fund the marketing machine and capture as much as we can. I think that strategy leans itself more towards a downturn climate. You're able to show investors sustainable margins, sustainable growth. And so I think insurtechs that are focusing on that will have a better chance. Do I think it's going to be easy? No, I definitely don't think it's going to be easy. I think over the next 12 months, we're probably going to see the worst of it before we start seeing, all the analyst reports that I've been reading is saying this is at least 12 to 18 months. We're looking at this kind of climate. And so, if I was an insurtech that's struggling that's struggling to raise money, I'd be thinking about, I would be thinking about M&A. I'd thinking about who I can merge with, how you can partner up and how you can potentially pivot, change your business model to require less capital if you're going to need a lot of capital over the next 12 months.
Mm-hmm. Yeah, no, thank you. And like I say, I think that's what we've seen. In many respects, do you think it's not positive? Because I think, as I mentioned before, I think it's been a bit unfair, because if you've built a sort of growth strategy based on kind of leaning into what's happened previously, you might build one which requires you to kind of go after market share, and it's a different approach. But is it more kind of, I feel like it's more prudently insurance now, because some of the valuations we were seeing were valuing things as if they were pure tech plays, but they weren't tech plays. They were essentially, digital MGAs, and therefore valuing it as a tech business is never going to work, because you can't run away from loss ratios, because that's fundamental.
Yeah. I think there's some interesting dynamics there. So I think it's there are digital MGAs out there that aren't risk-bearing entities, right? And so the loss ratio is still relevant, because it still affects their carrier partners and their risk partners, but in terms of their profitability, it won't affect their bottom line. It will in the long term, because it will catch up to them, right? You'll lose program support. If for other MGAs that are risk bearing like us, then obviously those fundamentals do matter more. But how I can see how a lot of insurtechs were able to raise these sizable amounts, and that is that you can sort of you take the round peg square hole analogy, right? You can take a insurtech digital MGA business and put SaaS metrics around it, so you can make it look very much like a high growth SaaS company, and you can kind of jam that into the SaaS high growth investor and get those SaaS those traditional SaaS venture backed valuations. And so I think that's where a lot of this is coming from. And there are some that have done very well out of that. However, it is still insurance at the end of the day. You're right. You still have to pay attention to your loss ratio and your margins, just like any other business. And so I think that is going to catch up. That strategy is going to catch up with a lot of people this year.
Mm-hmm. And John Tanner, I wonder what your thoughts are, because you raised money in 2018. You've been in the industry. That makes you an insurtech veteran, I think. That's the thing. So what does that kind of mean for you strategy wise? Is it kind of reassuring to see that there's a return to kind of core principles? I just wanted to get your thoughts on that.
Yes, I think, to be honest, we were very lucky to start our business when the market wasn't as flat as it is now. And the fact that we are in the middle of the hard market make it harder for, kind of smaller size insurtech company like ourselves or other insurance intermediaries to kind of be in this market. But, it's very encouraging to see there's more money being pouring into this industry. We can do with more, to be honest. And certainly, I think technology-driven solutions and digital MGA will be the trend going forward, purely because, the industry is screaming for operational efficiency, they're screaming for scalability, they're screaming for continuity. So I think, any M&A strategy would evolve around this. Profitability comes naturally when you have all of this in place. But of course, with the new kind of, embedded insurance and other alternative distributions that currently happening in our space will bring different product and technology solution, no doubt. And it's very exciting for us, in insurtech to keep up with. But nevertheless, certainly, in the insurtech arena, having that kind of data-centric insurtech solution that allowed insurance company to build the ecosystem is very, very important. And that's basically what we have been building and what we are going to continue to expand our platform.
Thank you. And Mark, I think that's a really good point to bring you in, because I think where you work in a consultancy business, you're bringing a lot of that innovation to carriers, brokers, the industry, but obviously at the point of implementation. So we've gone past ideation, innovation, and now you guys are helping them to kind of, unless I've mischaracterized it, so please correct me, but my understanding is that we've got the idea, and now you guys are coming in to help make it happen. Yeah. I just wanted to get your thoughts on if what you're being sort of requested of, what's kind of the perspective of ideas versus what's being implemented. Is there a mismatch there between what's being talked about in the industry as trends to what people are actually requesting? Are you seeing that reflected back?
I think that's a really interesting question, Alex. Certainly, I think just to pick up on points that Matt, David, and Jantana have made, it feels like it's going to be a tougher year, but there is definitely that focus around operational efficiency. With regards to sort of insurtech solutions and how they're being implemented, I think just going on to one of the things for me has been about seeing incumbent insurers, and particularly the clients that we worked with, really becoming more interested in some of the solutions that are out there in the market, and looking at how they can integrate those in an effective way into their existing estates, be that through changes in their core technology up to integration platforms and so on that they're implementing. So I do think the focus there has been around, okay, there's a lot of technology out there with providing some very interesting solutions to the market, into the customers that are out there in the market, but how do we get those to happen is one of the questions I think we're being asked.
Yeah, because it's one of those things that I'm very conscious of. So we started focusing purely on insurtech as a business at FinPro like 3 years ago. Yeah. Before that, we've been more broadly insurance, and we've seen the kind of influence of innovation teams change. Very small, sort of non-centralized, non-supported parts of the business. Yeah. Now, some people have much more significant budgets, they have investment, they might have kind of even some underwriting sort of capacity to put to that as well. That kind of culture has changed. Is that the kind of trend that you've seen? Kind of, has it changed in terms of who you're integrating with on the business? Is it getting that top-down support it needs to kind of happen?
Yeah, I'd say so, certainly from some of the conversations I've been having over the past 6-12 months. I think there is that, you're absolutely right, Alex, where you say there's this shift from having those innovation teams out on the side, out on the edges, trying to do elements of the cool stuff, but not really being listened to properly by certainly some of the more traditional elements of those insurers. So yeah, I agree. I think there's definitely that's coming now into the forefront of the thinking. What I've really seen is very interesting over the last 6 to 12 months has been that integration of core technology solutions into the core insurance products of some of these insurers, rather than just seeing innovation on the side and in some of the minor products.
Yeah, I completely see that. That's exactly what we're seeing on our side in terms of what we're being asked for talent-wise, and talent's a bit of a bellwether for what's actually practically happening. Matt, I wonder if I might bring you in again at this point, and I will bounce around. We won't just go around circle on this one. Just take turns, pass the parcel on the conversation. But I do think reflecting on those kind of key topics, embedded has been the thing that's been.
Yeah, man. It's got to be embedded, right? I don't know what the question is, but the answer is probably embedded.
We had all of these predictions, climate change and sustainability being key topics. I still think clinically it's still a topic. It's not really being addressed. I think there's some really cool businesses being built around it, but I wouldn't say.
What's that one about climate change? Sorry, I missed that.
Yeah, the
climate change, yeah.
Sustainability being a key topic. But
yeah, for sure.
It's been sort of talked about rather than acted on. I think embedded is on an absolute tidal wave. Robotic insurance technology, wearables, data-first insurance ecosystems, and growth of low-code, no-code technology platforms. For me, the things I've practically seen have been the low-code, no-code growth, and in terms of offerings, and then obviously embedded. But I'm very conscious that I sit on the side of working with insurtechs now, and every insurtech will tell you, this is changing the world and this is what's going to happen, and we've got momentum. I think the magic source is where the integration comes with the traditional industry and saying, well, actually, are they supporting it? And I wondered if your kind of eyes and ears that you have at Sonar, reflecting on those sort of predictions, what's actually been the thing that people have been very interested in finding out more about or engaging with from your side?
Yeah, so yes, absolutely. So our client base, probably similar to Mark's, we work with the insurance companies, right? So the insurers, the reinsurers, the brokers out there. And so when I'm answering that, I'm coming from a perspective of how they are transforming, evolving, adapting, innovating their businesses, right? So if we boil that, to use the kind of the strategy 101 basics, but if we boil that down, it's their route to innovation is buy, build, or partner. Right, it's a little bit more complex than that, but effectively, it's one of those three routes. But that doesn't get away from the trends that we're seeing, right? So they're either what we're helping them understand, and there's lots of stuff that you pull these trends together from various sources. As I understand it as well, is we're able to cut the data of tracking millions of companies into better understanding where tons of money is being put into, right? So that's how we kind of draw our top line trend analysis. So where are investments going? And then what we look at is the shape and size of those investments. So if it's really late stage, so kind of Series B and beyond, then maybe that's a trend that is actually here today, tomorrow. But if it's really early stage, so Series A and below, then maybe that's 5-10 years out, right? So actually what's really interesting is, we've got some clients that we work with. So, for example, Generali, we did a great interview with one of their team in our quarterly report, looking at the world of embedded, and he was really open and sharing about how they are looking at it both as a threat to their business, but also, and more importantly, the huge opportunity that it exists for them, right? And and again, calling back to a couple of weeks back in New York with you, Alex, seeing Rob Shimek from Boltec, who is an American guy out in Singapore. I think he's out this way, isn't he, somewhere? Who launched a business in 2020. They just had their second anniversary. They're worth over $1 billion already, and they are doing crazy numbers on the embedded. I mean, it's exciting. Seeing a business like that is just, I mean, it's a unicorn. Not in a kind of valuing from $1 billion valuation perspective, but it's just that there are very few and far very few of these types of businesses. But I think embedded is a trend that gets a lot of our clients excited. And I think mainly because it's changing the competitive landscape so significantly. So diving into that a little bit more, sorry, I believe, I know I've been hogging the stage and answering this one, so we might need to cut it down slightly. Is traditionally company A would look over their shoulder and see company B and C, right? And then it was about 5 years ago, this kind of narrative, this rhetoric of like disrupt or die, startups, insurtechs are coming, to steal your lunch, and and then sort of 5 years later, actually what we worked out is sort of 98% of all insurtechs are actually enablers as opposed to challengers, right? They're not the full stack kind of steal your lunch. They are designed to work with you to advance your business. And then what we have now is we've got a market where it's like, right, so startups aren't a threat, they're an enabler. Great, let's work with those guys. Oh, hang on, what's that over there? And what that over there is it's the likes of the big tech, the Amazons and the Googles or it's the retailers, the non-traditional players, right? So it's the e-commerce giants, or it's the banks, and suddenly they're reframing and reshaping insurance as we know it. I mean, that's so exciting, right? So from a distribution play, it offers a huge opportunity if these insurance companies can get in on that, but equally what a threat to the market if they don't. And so embedded is definitely one. Other clients doubling down on the world of climate change and sustainability. Again, a company I was on the panel with, what they call ICEYE. They're sending up satellites on SpaceX rockets, right? And so sometimes it's buy, build, a partner, and you partner because they're an enablement technology. Equally partnered because, well, we're never going to be building satellites and sending them on SpaceX rockets, right? So actually partnering with insurtechs because they're simply doing stuff we will never do as an insurance company. Super interesting, right? But really big in the climate space. Yeah, and then I'm with you on the. I can maybe jump a couple of the trends because they're a little bit kind of obvious, kind of well trodden type thing. I mean, in the most sort of respectful way I can say, but I think the adoption of kind of health wearables, we've seen a load of stuff really looking at kind of the sort of data-driven stuff. So not just wearables, but maybe like genetics. I find that fascinating. Like there's a startup out there, I can't think of their name, but before you even have a child, a couple can look at the genetic makeup of their child to understand the risk of illness that child might have. And that's terrifying stuff, right? Equally, sort of AI detection from a health perspective, as we give all of our data away and all that kind of stuff. So yeah, super interesting. And then the low code, no code. Yeah, so businesses like like Genesis, like others out there, storming it in the market. So I think there's tons of stuff, and it really depends on where companies are focused, what their core business propositions are, and how they're approaching the insurtech space. But over the next 5-10 years, I think we're going to see more change than we have for the last 100. I really do. I think it's the market really will transform, and it will be the divergence in performance lines between those who take innovation seriously and those who don't will be the most fascinating for me from an insurance perspective.
Yeah, and I think thank you for that, Matt. I think you're right, and I think the conversation around the early stage of insurtechs, the insurtechs are coming, they're going to steal your lunch, exactly was the narrative. Because people were positioning it that like it was easy to raise $1 billion balance sheet and then you could just go and compete with the big boys. We all know that simply isn't true. So, and when you do, there's been some slightly disastrous IPOs and shareholding situations that have happened. So I think now when you look at the state of the play now, it's like, right, okay, how do we help these carriers become the modern insurers we want them to be? And they're asking the same questions. So I think the difference in sentiment was more kind of, characterize it as this kind of annoying startup community saying we're going to take over, and now saying, oh, actually, every conversation I have now is about how do we partner with the insurance industry. David, I wonder if I might bring you in on that, because I think that's a really interesting point that, the way that you've structured your business, the way that you've gone about that is technology with good underwriting, risk carrying element as well. Does that echo with kind of your sentiment of the evolution of the insurance industry is an evolution rather than kind of a revolution as probably it was pitched previously?
Yeah, I think so. I think that there's a reason why a lot of these incumbent businesses have been around for hundreds of years. and they eventually have to adapt if they get too challenged. So I feel like it is certainly evolutionary in what we're seeing. There will be some, I'd say, some rising stars. There will be some insurtechs out there that are risk bearing and do make it through to be successful public companies and challenge traditional incumbents. But then there'll be other incumbents that we that will adapt, and we see them adapting now. You go to a lot of the insurtech events over here in the United States anyway, and there is, I'd say, mostly incumbents out there looking how they can work with insurtechs to involve the business. Like, I don't think there's I think if you go back 5 years ago, maybe longer, there was a lot of incumbents that were naive to insurtech, and they thought it was just going to be a little blip. But that slowly became a factor of daily life for everyone in this industry. And so I think we're going to see a lot more. There's going to be a lot more evolution, and there's going to be a lot more incumbents looking to work with insurtechs and looking to evolve their business model. I think embedded's a great example of that. I feel like that's one that's a no-brainer for a lot of these incumbents to embrace.
And talking about partnerships as well, because essentially what we're looking at is technology partnerships or MGA, digital MGA partnerships, the partnerships at various different levels. And I think that's the collaboration aspect of that. That's the thing I'm noticing a greater trend on. I'm having conversations where it was always with VCs or insurtechs, and now we're sort of talking to innovation leads and innovation officers and various different people, and kind of that's been proactive reach out from the traditional incumbent market. What does kind of partnership mean in the context of a business like yours? Because the challenge is once you become risk bearing, you're underwriting, you're up and running. Someone made this point when I was at ITI the other week, was that you have to kind of keep evolving yourself as a business to be at the forefront. So, do you look to technology providers out there and insurtechs to do partnerships on things like whether it be claims or risk analysis or whatever's relevant to you? Is that something you see in the future for yourself?
Absolutely, yeah. You can't do, you can't do everything well, right? Like, you can't go out there and, we work with a lot of construction companies, and a big mistake construction companies generally tend to make is, hey, I'm going to make my own project management software because, I can build buildings, why can't I build software? And then they find out it's really hard, and they end up spending a bunch of money and then going and get something off the shelf. Mm-hmm. Similar with insurance companies, there's so many moving parts in an insurance entity when you consider underwriting, data science, claims, risk management, there's just 1,000 moving parts. And so we know what we're really, I think the key for a successful insurtech is figuring out what you're really good at and what your core, what core innovation are you delivering? Like, what is the main efficiency gain you're delivering with your technology? Focusing on that, and then looking to other vendors and other insurtechs and other service providers that do other pieces of the puzzle a lot better than what you can, and partner. So yeah, we partner with a lot of different insurtechs on a range of different things, from claims. There's multiple services we use in our claims handling. There's multiple insurtechs we partner with on our data science and our predictive modeling. It's generally a combo for us of in-house and partnerships. And so we wouldn't be here if we weren't able to. Even our carrier, our paper is an insurtech technically. And so I think that's it's one of the beauties of insurance is that there's a lot of room for innovation. There's a lot of moving parts, and there's a lot of good companies out there that you can build great businesses just off one piece of the puzzle, which is pretty awesome.
Yeah. No,
Alex, may I jump in with a question for David? I appreciate you're the host, but David, I'd be really interested. Just out of from a market perspective, and feel free if it's sensitive information, not obviously to give any of this away. But your raise last year, so it's of a decent size, decent whack. Was part of that raise for you guys to be looking at M&A activity in terms of your kind of growth strategy? It might be too early for that. I'm not sure.
It's you know what, it's not, it wasn't like, for us it was really putting the foot to the floor on. We developed this really great underwriting model, and we were seeing some fantastic results with our portfolio in terms of claims mitigation and claims reduction. And so it really was putting the it's still the same strategy. We haven't modified our strategy at all. It's still market acquisition and expansion. So we're licensed in 8 states at the moment in the southwest of the United States. We're looking to push across the country this year and into early next year. So for us, it was really pouring fuel on the fire, so to speak. But you know, who knows what's going to happen over the next 12 months? There's a lot of I think, and this is speaking from an investor perspective, there's going to be a lot of great value deals out there. There's going to be a lot of great deals. And so, you know, for us, that may be the right insurtech that maybe we're partnering with at the moment. Maybe that becomes an opportunity for us to potentially look at an M&A play. I wouldn't say that, you know, anything's off the cards. But I think I think this just goes out to any of the investors out there. I feel like there's insurtech, there's just going to be a lot of great companies that have got great ideas that the valuations are going to be a lot more reasonable, you know, over the next 12 months. So I would expect, like, you know, as you were saying earlier on the podcast, I feel like there's definitely going to be a lot of M&A activity coming over the next 12 to 18 months.
Yeah, that sentiment's definitely echoed in conversations I'll be having, because the money's not going away. You know, the money isn't going away, but it's just going to be reinvested in probably a smaller pool of businesses or good businesses, good business plans. So yeah, and Jantana, you and I, well, congratulations! You just won a technology award, didn't you, with your business? Tapley just won an award. I forgive me, I haven't written down which one it is, but literally the last 48 hours, I'm sure you won an award.
Thank you. It was actually at the end of last year.
It came on my feed. It cheated me. I apologise. That's at the end of last year. But you and I always cross paths at events, so I think you're sort of a good temperature test for what's in the room. You know, in the course of kind of 2022 so far, have you seen any sort of innovations or trends that have surprised you, or is it kind of largely followed, you know, the kind of key themes that we'd expected to see? I just wondered if you kind of had a view on that.
I haven't seen anything unexpected yet. But having said that, it's only halfway through the year, so there may be something unexpected coming out of it. But I think, you know, like the list of emerging topics and people interest is pretty much what you capture in this podcast. So.
And in and how about you on the partnership side? Have you seen increased interest? Because you probably won't be able to tell me, but I suspect there's, you know, you've been in the business a while, you know, you've been around. Have you seen activity and people kind of reaching out, whether it's kind of potential investment or potential kind of acquisition? Is that something that's happened?
Yes, funny enough, we have like kind of two spectrum. We've got like smaller players that are looking for digital insurtech partner, and then we've got like mega big partners like reinsurance company. They're reaching out for insurtech. It's like I say, you know, like they both kind of need the operational efficiency. They need tech players to be part of their ecosystems. So we provide that connection. And I think, you know, like for people that come to us, often they have been elsewhere and get disappointed, and then they come to us. Yeah,
I suppose that one of the advantages there is because there's been so much kind of there's been such a kind of growth in the number of insurtech providers that there's a certain element of that's good for everybody, because if you're good quality at what you do, if your tech's good, then they can go through the rounds, and then you can rise to the top by the proof of your technology. Have you found that to kind of be a sort of virtuous circle? Has it been helpful for the amount of activity within the sector?
Yes, I think rising in competition is good for the industry because it's keep everyone on their toes, and also it's bring more interest from the VC, you know, perspective into our industry. I like innovation only happen when, you know, like people participate, and with the rise of insurtech startup means that there is a lot of interest. So I, you know, like I will see this trend to continue in the near future. And I think we're only at the beginning of the whole kind of innovation and digitizations.
Oh, just wanted to get your view on that. Sort of following on from, we talked about inquiries that you've been having to date. Has anything surprised you? That there been sort of surprising level of interest in certain things? Is it following trends? I suppose, and if there is nothing surprising there, what's sort of exciting you going forward? Where do you think there's some real opportunities? Because I mean, just sharing my thoughts, and David mentioned it, claims technology. I'm surprised we haven't seen more in the claims space, because all the kind of top line language I hear about is improving the customer experience as an insurance consumer. But then I see a sort of underutilization of the growth of claims technology. Now, that may be because I'm doing poorly at my research and I'm not picking it up. It may be because people are building it in-house. I don't know. But claims, for example, it seems slightly underserved from my perspective, when people kind of quite often talk about being the shop window of insurance. But have there been any trends that surprised you? Is there anything new, or is there anything you're excited about for the rest of 2022?
Oh, good question, Alex. Yeah, there's lots of stuff I think in there. In terms of trends that have surprised, I think you've highlighted half a dozen trends at the beginning of the year, and I think each of those has sort of stepped forward in different ways and different paces. And I'll pick up on the embedded insurance one. I think for me, that is one of the areas where it's not just about embedded insurance, because I think the term is starting to get quite a lot of hype around it. But I think it's about introducing new distribution channels to consumers, and really almost seeing insurance as a seamless aspect of that journey. We've certainly seen quite a lot of embedded insurance solutions being around for a few years now, but generally at quite a sort of small product basis, small value, ticket insurance, travel, things like that. But it's only really been probably the last 6-12 months now, we're starting to hear news about motor manufacturers, OEMs starting to get more involved in that sharing of data and so on. And for me, that's probably one that I'm certainly seeing as an interesting area and starting to generate quite a lot of conversation across the clients that we work with. And yeah, for me, then that comes on to what's really been quite exciting about what I've seen so far. And it's the incumbent insurers more willing to embrace these technology solutions. You talked about claims there, and I think that's a really key part of that value chain. Now insurers are less focused around bringing in consumers, particularly with things like the fair pricing regulation that's coming into the market and so on. So we're seeing much more or higher retention rates and so on from consumers and insurers. That really should be shifting insurers into focusing more around later stages of that value chain. So how do they hold on to those how do they hold on to those customers? How do they manage those customers through claims? And a particular interest for me then is around how do they help prevent the impact of some claims. You can never take away claims completely, but I think using technology to provide preventative, predictive data is really, really key here. And I think insurers can do a lot more of that over the coming months and years.
Yeah. Can I jump in, Alex, on that? Because I think there are a couple of really interesting things, Mark, with what you said. Because there's one is something that we're seeing across different sectors. It's that move from protection to prevention, right? And I think that's really fascinating. So claims absolutely has a role in that, because actually what we're trying to do is keep, I don't know, from the health side, keep people fit and healthy so they don't need to make a claim, or from an auto perspective, it's so they don't have that collision and all the rest. But equally, there is some really there's a real opportunity through claims to delight customers as well, right? So just before traveling, my dog got ill. I'm insured I've bought by many pets now. And it's almost kind of that lemonade example that we read about or we heard about a few years ago, which sounded all like a load of a great bit of PR spin of claims getting paid in X seconds, and it really was that. My dog got ill. We took him to the vets, got a receipt, photoed it, sent it, uploaded it to the app, and I got paid immediately. It's like, so that kind of straight through processing as an enablement technology to make that happen. I mean, I suddenly loved making a claim. I mean, who would have thought, right? Ideally, yes, my dog wouldn't have got ill, but he's a retriever. He was gonna, he was gonna eat that anyway, right? It was gonna happen. But it's if we can, all like Tractable getting so I really love the fact that kind of European startups are scaling so well and now moving into other territories and stuff. That really excites me as a UK resident. And seeing like being able to walk around my car and take a kind of video image and for the parts to be forward ordered ahead of like saving me 2 weeks of kind of that journey of getting my car fixed, to the kind of part supply. I mean, that's really clever stuff, right? And that's all kind of encapsulated within the claims experience. So I think there is some really smart tech in play out there. Could it be more? Yeah, I'm absolutely sure it could. But I think there's lots of good stuff, and I think lots of stuff to focus on. But absolutely, moving sort of back to Mark's point, moving that kind of from protection to prevention. So actually, we're moving away from that kind of claims player tool. I think is even bigger and even more important.
Yeah, I have to agree with you completely, Matt. I think there's so many technology solutions coming to market that are utilizing data effectively that we really need to see more of that coming into the insurance industry and embedding itself within the incumbent insurers, and not just for a point solution around claims, but also how does how can that technology be thought about in a different way to help customers and potentially some of that behavioural change from a customer perspective to minimise the impact of claims all the way through. It's that kind of that phrase of insurance having your back. Really, it should be all the way through as opposed to just at that point of claim.
Yeah, and just to add to what Matt and Mark was saying around prevention, I think technology have gone so far now, especially the use of AI in insurance space, that if you have like data, you can actually work out exactly what the customer needs. Classic example, by the way, Google have compiling all this data, search data. You can actually, based on customer search keyword, you can work out exactly what happened to that person. So, for example, like a teenager may looking up, oh, I'm having a morning sick, my stomach is swollen. It could be that she is in the early stage of pregnancy, which she herself may not be aware of. So there's a lot of that usage. And imagine if you translate that into insurance space, suddenly, insurance. Like even cancer, like in the health sector, could be used to predict what is happening with your customer at the point when they buy insurance. So this is very important fact that the technology is there, but it hasn't really quite transferred into insurance space yet.
I think as a general trend as well that isn't on there that this all speaks to is coming back to kind of reimagining that customer experience and that customer journey. Yeah. And I think it's one thing that insurance used to basically say that, yeah, it's a backstop for your worst case situation. And we're now going, as consumers, we're in a world where we go, well, that's not enough, and Matt's exactly right, delight your customer. I think it's something that we haven't taken enough of advantage of. I mean, it's taken another industry, the recruitment industry, the one that I know well. The one thing that I frustrate and agitate about all the time is actually you've got to treat people that are coming into your business as having a customer journey, but we don't. We go, well, we advertise jobs and kind of the attitude of they're lucky to have one. Well, what's actually happened in the pandemic, if we've gone, our people are our lifeblood, they're everything, we now need to look after them. And culturally, we've changed that dynamic. I think insurance is going through its own journey as well to say, okay, yes, we need to provide the security that we will pay. We need to have transparency about what those conditions are. But there's so many opportunities to engage. Like my motor insurer doesn't send me anything about my driving, but it could. It doesn't send me anything about where I park. Is there a better place to park? Is there, there's a myriad of things that you can do. But Matt's perfect example is the claims technologies where I've had a crash in my car and, it's automatically ahead of time booked me into a garage and those sort of delightful experiences that's the key thing for me. The trend that's emerged, maybe not this year, but over the last kind of 2 years, 18 months is, let's reimagine what the customer journey is for all customers within the insurance industry, and let's utilize the technologies that give them the best experience. Because they're going to buy insurance, but they've got to buy it from an experience standpoint, and that's highlighted when you look at different areas. Because we had a business from Brazil. On the Brazilian market, it's not mandated to have motor insurance, so you only buy it if it's worth buying. Whereas in the UK, we buy it and we buy on price typically, because we have to have it. But there's nothing to stop you buying because it's just the best customer experience. But we seem to be having that battle now.
Yeah.
Yeah, you have to. You certainly, I think, as we move ahead in the next 5 years, it's pretty clear insurers have to add value. You can no longer just be an entity that pays claims. You have to be having that edge there where you're delighting your customers and making. And if you're in commercial insurance, you're making the business a better business. You're acting as an advisor and as a you're doing more than just paying the claims, basically.
Yeah.
I think from the claim standpoint, I imagine as customer myself, I want a technology that would detect when the claim should be made on my behalf. So let's say if I have a heart attack, I want to trigger a health claim, or if my flight delay, I want to trigger travel claims insurance, for example, without me having to fill in form. So that's what I would like to see in the claim space.
And that's almost kind of touching on the parametric side of things, right? Which is another big old trend that I'm just acutely aware that I might still be on mute. Luckily, I'm not this time. But yeah, it's a big old trend that's still kicking around this year, and that we're seeing still plenty of interest and investment into as well. That flight delay one it's a classic example, and a real pain. But if and it's the same. Back to the climate change and sustainability, Alex, to one of your earlier trends. It's a big play in that, right? It's if the flood should go above this level, an immediate payout is made. And Flood Flash and a bunch of others have got some great case studies around how they're able to support communities by paying out so very rapidly, so they can actually rehouse themselves, protect themselves, and all the rest with that with that new cash available. So rather than sort of be skinned for 3 months and desperately fighting your insurer for a payout.
Yeah, and I think Parametric's another one that I was really unaware of Parametrics until a couple of years ago, and as soon as I heard it, I just thought, even from a consumer perspective and with my business owner hat on as well, is that is the solution to most of my problems. But it is an acute solution to a failure that is long been acknowledged in insurance, which is flood or business interruption. Businesses go under before they can get the payout to get back on their feet. So it's closing that feedback loop, and it's changing that customer journey at all levels. And I think David's point was exactly right as well, because I think what we're starting to see now is people care at a commercial level, commercial insurance, whereas previously a lot of the kind of innovation came in on either personal lines or health, because I don't know if it's more discreet, it's lower risks, maybe it's kind of easier to adopt, it's easier to change, but we're really now seeing that kind of innovation in both commercial insurance and also even in reinsurance now. Reinsurance is kind of the highest part of the value chain, and therefore it's been the slowest to get to it, but that's been exciting to see that this year. I'm really conscious of time, so we don't want to go on, but I want you all to have a last parting kind of word. What are you excited about for the rest of 2022? And I'm happy that you do a shameless plug for your own business as well, in terms of what you're excited about and what you're getting involved with. And then that gives me an excuse to do mine as well, so I can do that. So David's come furthest for the journey. Oh no, probably Matt today. I don't know, but we'll start with David. David, what are you excited about for the rest of 2022?
I mean, just as CEO of the company and just building the business every day, I'm just really excited to continue on our growth path, continue to prove out our value proposition and add value to the customers that we're working with. They've got a lot of, there's a lot of things going on economically in the country over here in the United States that we'll see progress over the next 12 months. But fortunately for us, we're supporting the core businesses over here, manufacturing, agriculture, construction, which, all perform core functions in the economy. And so we're just so lucky and happy to be working with these businesses. And helping them retain workers, helping them complete their jobs and continue to, provide food and do things that we need to do, and that insurance performs a core task in supporting. So really excited to be building out the businesses and supporting those core industries that, through some potentially difficult times.
Thanks, David. Dandana, what's exciting for you? What innovations are you excited about, or what's happening at Tapley that you want to share for the rest of 2022?
For those who doesn't know, Tapley provide API cloud-based technology solution for insurance company, and part of what we do is to build that data-first insurtech ecosystems that we can, help our partner connecting with each other. We obviously very exciting about continue developing this, because we believe this is the future. And that's why, we're going to be bringing more exciting partners into this network and ecosystems. And hopefully it would benefit both the incumbents, but as well as the customer at large.
Thank you. Matt, well, you've got loads going on, and like I say, with Timely today, you're partnering with Lloyds Lab. What's exciting for Sonar and related businesses 2022?
Yeah, I mean, it's going absolutely brilliantly from a business perspective. I mean, like the cliche of, the kind of bottom of the hockey stick growth, that kind of, it really feels like that for us. So I think it's globally, we're seeing an enormous interest in the insurtech space, or maybe just the startup and innovation space, to not want to narrow it too much. And I think with the climate change that we're going to see, the economic climate change we're going to see over the next 6-12 months, I think what will become extra important is being able to separate the wheat from the chaff and be able to really focus in on which are the startups that we should be partnering with, predominantly investing, maybe acquiring, and how on earth do we get to them, how do we evaluate them. And I think that will only put us as Sonar in a stronger position to help our clients around the world. So yeah, I mean, super exciting, and super good fun as well. So
thank you. Yeah, and Mark, Altus Consulting, what's happening with you guys for the rest of 2022?
Yeah, similar to Matt in a way. We've got a huge amount of growth at the moment, really bringing on some strong new clients for us. And for me personally, that's really, really exciting because of the type of work that we do, able to sit and work on both sides of the fence with the clients and with insurtechs. So helping our clients identify and figure out how they change their business and get it ready and fit for the future, but then also which technologies are out there and helping them work with and identify the right technologies so they're really strongly positioned into that market. And then flipping that around on the other side, just discovering new insurtechs for me and looking at the different solutions that are out there and seeing some of those trends evolve over time and really come to market with something that is valuable for both insurers and for customers alike.
Thanks, Mark. And at FinPro, we're very much the same as you. We're very excited about the new insurtechs that are coming in, but I think we're starting to do much more in the incumbent market, and had inquiries about, Alex, do you know how to build an algorithmic trading team to go into our insurance carrier? That's been quite exciting, and building out those innovation functions and having them have seemingly more meaningful conversations and meaningful budgets. So I think it's a really exciting time, but it's a very different, changing economic climate, as we've kind of all acknowledged. Thank you so much for being part of this kind of 2022 mid-year review. It was brave of you to come on and kind of share your opinions, because I think it's easy to sit on the sidelines and not give your opinions on record. So I thank you all for doing that, and really appreciate you being part of the first kind of panel-led leadership and insurance podcast. So thank you, Matt, Jantana, David, Mark. Really appreciate your time.
Thanks, Alex.
Thanks, Alex.
Thanks, everyone.
Thank you.
Cheers all.